I want to talk about a concept that is just not thought of by most, and I'm not quite sure that the insurance companies necessarily subscribe, but again, I want to open your minds. One of the questions that quite often comes our way is what happens if we are not in good health? If we're unable to buy life insurance? Well, we created something years ago called surrogate insurance. In other words, can I use someone else's life to put the insurance on in order to benefit the family? And it's a yes or no, a yes and no answer. I say that because there has to be an insurable interest. In other words, where your life is affected financially as a result of the person passing, there has to be this insurable interest. But let's just say a husband and wife who have a large estate wanting to buy insurance for the benefit of their children to cover estate taxes, but they're uninsurable. What are some of other approaches? Well, quite often, the children are already in a good position. But it's the grandchildren that they want a generation skip and they want to get all that money too. So quite often, in fact, in my family, we did the same thing. We were able to buy insurance on myself and my spouse, my brother and his spouse, my sister and her husband, and it was through gifts that my parents made to us. Now, was it that they were trying to do something for us? No. They wanted to create monies for the grandchildren when we, their children, pass away. We became a surrogate, so to speak. So they gifted the money to a trust. We got insured for the benefit of the grandchildren. That's a way of leaving money to a future generation through your children. And by doing this, once again, you're creating much more leverage because at our ages, the insurance is much less expensive. In fact, this coincides with another client of mine who we've bought tremendous amounts of insurance for the children to cover estate taxes and insurance on the grandparents for the benefit of the grandchildren as well. But now they've come to a point in their life when they've said, you know, we are doing so well with our retirement account. We don't need any of this money. We've really taken care of our children and our grandchildren. We want to take care of the estate planning for our children, for their children, and their children's children. So what are they doing? They're taking that extra money from their retirement account, knowing that they have to pay tax, and gifting it to a trust, a generation skipping trust, and using the money to purchase insurance on their children and spouses for the ultimate benefit of their unborn grandchildren through a trust. As a result of this patriarch and matriarch who are in their 80s, they've created the wherewithal for their children to have a tremendous lifestyle going forward, their grandchildren having an even more tremendous lifestyle, and the unborn great-grandchildren to have even more. And this will continue in perpetuity, all using the idea of this surrogate insurance. Now you ask, we love that idea, Howard, but what if the original mother and father who started the whole program weren't insurable? Then would we be able to use somebody else? It becomes tricky. The question is, can we use another set of in-laws, meaning maybe not the one child's parents, but maybe the spouse's parents? Is there an uncle, an aunt? Again, there has to be an insurable interest, but just open your mind to the possibilities of what can be done using this surrogate insured approach.